Good evening. This is Doc Severson for the TheoTrade report for Thursday, July 27th. Today has been an entertaining day. You can see that in this case, Amazon, which just released earnings, missed by about $1 or so, and so far is being punished lightly in the aftermarket. Now, it did gap up early today based on Facebook earnings, so in sympathy with Facebook earnings, and then it ramped up to the upside. So the upper end of Amazon was up at 1083. So really it's lost about 60 points between today's high and current aftermarket after earnings. Who knows what's going to happen overnight or tomorrow morning. So that's really the third of the tech giants that we had this week. Yesterday, of course, was Facebook, and Facebook at least initially, what happened initially on this one was that Bloomberg reported the wrong number, and so they tanked early on, and then they reposted the correct number, and all of a sudden we got the overnight ramp on Facebook. Facebook is just exploding, right, and kind of leaving everybody else in the dust. So the other tech giant that we had reported this week was Google, and Google got pretty well hammered the other day. In fact, I have to add another day onto here because, yeah, that was on Tuesday that we reported earnings on there. So Google is still down and didn't take this afternoon's sell-off very well. Speaking of that, if we look at our heat map here, pretty much across the board we had carnage today, with few exceptions. Obviously, Facebook is the one exception that keeps popping up everywhere here. Apart from AT&T, that's about it. Everything else is red. If we look at the sector spiders here, we can see that really the only sectors that were up today were energy. We had consumer, not only staples, but also discretionary for the second day in a row. Everybody else was getting hammered, especially XLK as well too here. And also, you can see the VIX in this case actually gapped up or ramped up to about 18% spike before finally normalized back down. So what does this all mean? What happened today, and where does it fit in the context of what's going on in today's market? So today's selling left a lot of people kind of looking around like, hey, what is going on? What happened? And there was a lot of rumors flying around today, such as somebody leaked the fact that Amazon was going to miss. That is one particular rumor. Another rumor is that a JP Morgan analyst was saying that we may be very close to the turning point, and that got people spooked, and something else was to do with North Korea. In the end, it really doesn't matter, does it? It doesn't really matter what the catalyst is for this. Right now, what we have is we have a market that's in exhaustion right now and is just screaming to the upside without relief. And look at this. I mean, this was today's movement. You can barely see it up here. It doesn't even show on the weekly chart. You can't even see it on the monthly chart on the S&P. You can't see it, right? So this is an issue of perspective. So after we've seen months and years of nothing but green candles, and any red candles that we see are just another dip to be bought that causes a slingshot, we get a red candle that shows up today with a pretty decent range. So we had a high of about 84, a low of about 60. So a 24-point day on the S&P in terms of range, right? And people lose their minds. People are not used to this level of volatility and the type of price action that occurs when markets actually start to sell and the algos kick in. You can see this just in a 2-day intraday chart of the S&P here. So this is all, typical bullish action, nice structure, higher highs, higher lows. Everything is working along just perfectly here. And then all of a sudden, this hits the tape. And then all of a sudden, it's just a complete sell-off, right? So we lose about 20 handles on the S&Ps. From noon to about 1:30. And actually, this is still, when you consider that a 20-handle move takes an hour and a half in today's market, this is still very, very mild. And still we had people losing their minds today, not knowing how to trade this. Notice that the character of this price action is very, very different from what we see during this sort of lazy, low volatility, low volume movement, and all of a sudden the volume kicks in and the movement kicks in, is much more violent. The swings are much longer. So there's a whole different level of emotion that gets kicked in when markets start to sell off to the downside. So all of a sudden, you know, the algos kick in and it just gets much more violent on moves to the downside. And so my suggestion would be is that you start to prepare for this. Start to prepare for this type of motion, whether or not you have to look at old charts or look at replays of recent charts and red candles, but get yourself ready for this type of volatility because it comes down to the risk and the reward. There is more reward that's available from days to the downside like this, but at the same time, there's more risk. There's more confusion. People are not ready for this. They're not used to this. We've had basically 8 years now of just relentless upside action with occasional bursts of fun inside of this, but nobody's ready for this. So be the prepared trader. Be ready for the downside. Don't look for the downside. Don't have a bias to the downside. Just be ready for it when it shows. Hey guys, before you go, let me talk to you about a workshop I'm going to be giving this weekend, this Saturday. And it's on trading the intraday cues. An example of this showed up today. So today's big sell-off that we had, I went short on the Nasdaq at this point, and the simple way to do that is by buying a put option. So I bought a 146 put option that expires tomorrow, and I spent $1.01 on this, so $101 per contract for this. So that's limited risk for the trade. And I ended up selling it down here at about around this time here, near the bottom of the day, for $3.10. So not a bad return for something like that, and really doing very little during that 90 minutes that I was in that trade. That's the type of trade that we're looking for, where we're just going along with this system here. So we identify the system over here on the anchor chart, and then I go over here to the signal chart and identify the place to enter. So once I've decided what direction to enter for this, all I have to do is just go down to the signal chart here and look for a system signal. In this case, there it was right there. There's the hook that we're looking for on the study that we have, which is called the RSI Laguerre. Now, kind of the hidden benefit behind this system is that once you learn how to do this on something quicker, like the intraday cues, you can apply this towards anything that you want to trade at any time frame. So in other words, this could be something like a weekly chart, and the signal chart could be a daily chart. You can use your scans to be able to identify these, but the process is the same. As you identify the trend and the swing that you're going to enter over here on the anchor chart, and then you simply go over to the signal chart to go ahead and enter that trade. But the reason that we're doing it on the cues right now is because this is where we're getting all the movement in the market, is intraday on the cues. And the cues right now, the Nasdaq is the IT index. This is where the largest stocks that are attracting the biggest attention are moving, and we're getting the most volatility and movement out of these. So the most opportunities is coming through the cues right now, which is why my workshop for this weekend is going to be trading the intraday cues. So we're calling this the high probability intraday trading system. And I'll be the instructor for this. This is going to be a live session this Saturday, July 29th from 10 to 1 Eastern Time. Okay, so we'll be able to answer your questions as you go through the system. So for a grand total of $97, let me tell you what this includes. So again, how you can identify 1 to 2 high probability setups every day using the cues. How this strategy fits in today's market volatility. There is no volatility, right? But if you go into the intraday on the cues, there's plenty of volatility. How to limit your risk to create a stress-free trading experience. If you're trading with limited risk positions, if you know the right option to buy in this case, it's a very laid-back trade. It's very benign. It's not the same experience as trading futures. How to use multiple time frame charting analysis to increase your precision and accuracy on entries. The hidden benefit here is that once you learn how to do this system on the intraday, you can apply this towards whatever else you want to trade, whether or not it's selling puts, covered calls, vertical spreads, whether they're debit spreads or credit spreads, anything that you want to do can be done through the same type of system. This is the same system that I use for everything. So I've tuned this one specifically for intraday trading on the Qs. So how to run trades, how to be able to get profits on the initial trade, and then how to be able to run perhaps a second or third contract on here. How to be able to set up a trading plan for this system. So one of the things that we always do with this is that we set up trading plans for this. We set up templates and spreadsheets for how we do this, how we track, how we get better at this. We are also going to talk about how to apply state-of-the-art money management. So state-of-the-art money management is where you have these, you start off with a small number of wins and you get into some house money, and then you can increase the size of your position geometrically as long as you have a positive profit factor. This is state-of-the-art money management that we use for these. Okay, when to open the position, when the best time to close the position is, understanding how to get flat by the end of the day. This is going to be a step-by-step workshop on how to systematically add this strategy to your arsenal. Okay, so we're going to be looking at how the trades can be done with a small account of any size, looking for daily consistent returns, right? Why using the Qs? Why are we using the Qs for this? Well, we talked about that before because this is where everything's happening today. What strikes to buy? So this is actually very important that we have the right option depending on what day of the week we're at. Okay, when you attend this, you will also get the on-demand recording. So even if you can't attend this, you'll also be able to get the recording to this and tune in later as many times as you want to. Okay, a really neat benefit from this is that actually if you sign up for this, if you sign up for the live, you'll be invited to join us at TheoTrade for the entire day on Monday, July 31st. Trade along with us. So see how we do this live. Okay, so hindsight's 2020. Learn how to pull the trigger on these trades. Learn the daily ritual that gets me in the right mindset for these things. Make sure that you don't have a bias when you're entering the day. Okay, how to position size correctly for risk control. You're going to be starting with small positions. Actually, what I'd like to do is to see you start with SIM initially until you prove to yourself that you can do this, and then work up to one contract. Okay, build a trading plan with this. Okay, build a trading plan with this. Now, here's what's also cool about this is that it's not just this 3-hour class that you're going to get live in the recording of this, but you also get a 5-hour series of fractal energy trading. So understand how to use the multiple time frames, understand how to read price action, understand how to use the CHOP index or the fractal energy indicator that we have to be able to understand the context of what's going on. Second is going to be that RSI Laguerre shared study. So the RSI Laguerre with the embedded fractal energy is going to be available for you for thinkorswim, as well as another session, which is a coaching session for using that indicator. Okay, don't forget you get that $97 credit to use towards your total Theo 12-month membership. So if you want to sign up as a full member, okay, you can read more about that on the right-hand side here. Okay, so $9.97 for that. Okay, and as well, you get the discounted rate at TD Ameritrade for your commissions. It's very important you have the right commission rate and commission structure if you're going to do these types of trades without ticket charge, with fixed rate. It's got to have it. Okay, so don't miss out on this. This is going to be this Saturday. Make sure you attend to this. Look, for 97 bucks, look at the amount of information. You get almost 10 hours of information for this for $97 one-time charge. Hope to see you there on Saturday, and also hope to see you in the room on Monday as well. Thank you.